Dirty Beats.
What's good, everybody, man? I hope everybody's having a blessed and productive day. Jordan here, back with another video, and today we're going to talk about market structure. I think market structure is one of the most key elements of trading, and honestly, it was one of the things that really didn't help me take a hold of my trading until I understood this market structure. So with that being said, let's get into the video. But before we do that, make sure you guys hit the like button, hit the subscribe button, and turn those post notifications on so you guys know when I posted a video. So anyway, got that out the way. Let's get into the video. So we're gonna bring me way down here, and we're just gonna jump into the charts right over here. Euro USD pulled up. Don't need to look at anything else. And all right, let's get into it. So appreciate you guys for watching this video today. All right, guys, cool. So let's get into it. All right, so again, we're gonna be going over market structure, and the thing that I first want any beginner trader to know about market structure is that if you don't understand market structure, throw the learning strategy out the window. Throw the strategy out the window. Whatever that you want to do with trading, you can't do it until you learn market structure. I don't know if anybody's said it like that before. I'm sure that they have, but I didn't start seeing, a turn in my trading. I didn't start seeing, a successful turn in my trading until I really understood market structure and the ups and downs and the highs and lows of market structure, the flips, the bursts of structure, and whatnot. So with that being said, we're gonna get into it. I'm gonna take you guys over here for a little bit, and we're not gonna look at the candles, but we're gonna still go over market structure, obviously. But I'm just gonna demonstrate that the best way I know how. So with market structure, you have your uptrends and you have your downtrends. Right now, we're gonna start with the uptrends. Each uptrend has a factor of two precincts, basically your higher highs and your higher lows. So I'm gonna draw that out right here. Boom, here's your higher high, your higher low, higher high, higher low, higher high, higher low, higher high. So the thing about these higher highs is that, and really the thing about this structure in general, is that for one, we can identify that it is an uptrend, okay? For two, we want to identify where is the highest high. At this point, it would be here, right? However, while I'm identifying the highest high, I want to ask myself, is it closing above this last previous high? If I come down here, is this closing above the last previous high here? And again, I actually want to label these, your higher highs and your higher lows. So I'm going to do that real quick. You have, your beginning. Oops, let's go here. Your higher high, higher low, higher high, higher low, your higher high, higher low, and then your higher high. Again, focusing first on the higher high, the highest high. Is it higher than this last previous high? And afterwards, you're looking at the pullback and you're basically asking yourself, where did that high come from? You look over here, it's coming from this last low here. Most people will take out their fib and measure that. That's a whole nother talk for, I guess, another video. But anyway, a place in the market at this point in time with the high, at this highest high, I see a lot of people get trapped in this exact area here because they may see the market come here, come below, this last high because of what I just said. Did it, close below? Did it close above this last high? And I said yes. However, in some instances, when price comes down here, it may push past this last high. However, if price does not break your last low on an uptrend, structure is still trending upwards in this case, pretty much. So if it were to look something like this, you have your pretty much your low created below this high, and let's go back one. The low is created here. Now, then a pullback is created. Now, instantly, people are going to think, okay, well, since this low is created and then the pullbacks happen, I'm going to fib the low that this has just created because this apparently has broken structure. What they think has broken structure this high, even though it hasn't broken this low, they're going to fib this, get in for market execution, try to ride this wave down, and they'll see what happens then. Hopefully they have a stop loss, all right? However, in this case, since the lows aren't broken down here, price can very well much do this, go above their stop loss, take out their stop loss and then go in the opposite direction, which is against their trade, but you lose that trade, which means that you lose money. Nobody wants that. It happens, but nobody wants that in the long run. That's just a place where I really, and for myself, especially myself, that was a spot where I got confused at. There was a spot where I didn't understand the full market structure. And, it was a spot where I was getting taken out of my trades because of the fact that I saw this impulse down where I thought that it was like a true impulse and a break of structure. More importantly, I started to fib the sells, tried to take the sell, market execution. Price goes against me. I lose that trade. I lose money. So the flip side to that is the actual break of structure, pretty much. So you got your highs, you got your lows down here, right? Now, based off of what I just said, if price comes down to break this, okay, cool, let it break there. We're not flipping structure until we see actual lows get broken. So here is a low get broken, right? This purple line. Let's actually make this purple line a little bit bigger, just so it's a little bit more visible. So we're going to do it like that, right? So like I said, structure isn't broken until these last lows are broken. And this is where you can start to fib. This is where you can start, look for sells. If we're in a buying environment, if we're in an uptrend and you see price start to, fiddle around here, not necessarily breaking highs, coming around, testing these lows, but still not breaking lows, wait for it, man. Wait for it to come and break these lows, get confirmation, and then react to it. We're in the business. Forex is the industry of not predicting, but reacting to what you see on the charts. So here it's like, okay, you don't want to be the first ones in this. Possibly price could go against you, and it could be bad. You could lose money from there. However, if you wait until you see price break these lows, then you're reacting to it. Now you can start to see, okay, price is breaking these lows. Now I know that with price, where price has gone, it has to be retested. So then I'm waiting for the retest here and the continuation downward to break these lows, also breaking these lows here and the continuation downward, and then so forth and so on. Now I can start to look for sells instead of buys, because guys, who wants to buy in a selling environment? And who wants to sell in a buying environment? And honestly, it's only if you don't understand market structure. I think a lot of the problems come from this, flip of structure here, or not the flip of structure. Pretty much, where people are getting taken out, faked out, is this area here. They'll put in their fibs here. Again, they'll take their sells to go down, to continue down. However, what they see is price to continue upwards like that. And that's not the way you guys want to trade. Again, you do not want to be buying in a selling environment in a downtrend, and you do not want to be selling in an uptrend. Those are called, and those are considered counter trend trades. Basically, not to get off, too much on a tangent, but if we're going up, then that pretty much means that you'd be trying to sell this. And in that case, if you were to sell here, you'd only be able to gain the profit in the pips pretty much into this, over here at this, I'm drawing a blank at this last level of support, pretty much. This last level of resistance now turned into support because it's a new high. people are going to want to sell there. And, that's not the trade. I guess if you're a scalper, maybe, but no. If you're on an uptrend, you need to be buying. If you're on a downtrend, you need to be selling. It's as simple as that. So now what I'm going to do is I'm going to go over here, erase all of this, and I'm going to try to show you guys pretty much what it looks like from the candlestick perspective. I'm really not trying to make this video too long-winded. I want you guys to be able to watch this, get the gist, get the structure from it, and then go back, take notes while you're watching it, and then, be able to apply it for yourself. So really don't want to make the video too long here. With that being said, we got a lot of examples here in the downtrend environment, selling environment. Based off what I just showed you, you could pick the higher highs and the higher lows up yourself. In this case, the lower lows and the lower highs. Let's rectangle. Higher highs, higher lows. You know what? I'm gonna do the arrows. Higher high up there, higher low, higher high. Testing these lows. Oops. You know what? Let me go back. Let's try it again. Higher high to the higher low, pull back, and then boom. Breaks the support, now turn resistance to continue lower. Comes up for a double top, and that's a pattern that we must go over in another video to continue lower. Ooh. Let's not do this here. Cool. To continue lower. So I'm just gonna keep marking the higher high, the lower lows and the lower highs pretty much. Here's a lower high, kind of lower low. Boom. And all it is just taking out the previous levels of support, making them resistance now, turning them to resistance, and continuing lower. Sometimes it's not perfect, guys. A lot of patience is required in these moves, and we're continuing lower. So now here, it looks like we have a flip. And this is where I want everybody to be cautious in these areas here. It doesn't always have to be on the daily. It could be on the 4 hour, it could be on the 1 hour, it could be on the 15, 30 minute, whatever. Look out for the flip of structure. Look out for the break of structure. Here we have our last low after these pullbacks here. Okay. So from here, we can continue upwards, pull back to our area here, pull back to our resistance area here, just breaking support, but it comes down here, but it does not break these highs over here. So what happens then? Boom. We rise a little bit, we push, we start breaking highs. What happens? We push again. We pull back to retest some of the highs in which we just broke. We burst again, come down, boom. Now we've broken this high, these highs here, and now we're retesting this last level of support that has now returned resistance. So of course we pull back. Anytime that there's an impulse buy or sell, we're always gonna pull back, guys. There's always gonna be a pullback somewhere where there's an impulse. We got our impulse. Again, it breaks these lows, pulls back, retest the highs again, boom, breaks these highs above here. Now we're continuing upwards in the trend in motion. Yes, this comes down and breaks these lows, but it did not come down to break these. And now we're continuing here, and that's where our trend is right now. And that's where we are at current price. And again, I really don't want to make this video too long, but it's as simple as that. And honestly, I think that, market structure, it's not the most simple thing. However, I want to say that it's, again, the most important thing, but it's not that hard to comprehend. I don't think a lot of people teach this. I think it's really widely overlooked. My dog just came in here, little scout. I think market structure is really widely overlooked, and a lot of people do not teach this. So I just really wanted to get on here and make this video, and mainly because it was a spot where I had trouble, and I feel like a lot of other traders, beginner traders out there these days, don't grasp this concept. They get on YouTube and they see, moves be made. They get on Instagram, see moves be made, and they don't fully grasp this concept. Meanwhile, it's one of the most simple and important concepts that you need. We're back. So what I was saying is that market structure is one of the most, if not the most important concepts to grasp in your trading journey, in your trading career. Especially if you're a beginner right now. You'll see a lot of the things on YouTube. You'll see a lot of the signals on Instagram and whatnot. People streaming. And a lot of those guys that have a lot of chart time for one, and they have a lot of other, people for two, taking their signals. And a lot of those people don't understand market structure. And I'm not saying anything about the people streaming. They do an amazing job at what they do. However, sometimes I do want to see like the people in there and whoever's whatever, videos, no market structure. So that's pretty much why I made this video about market structure. It's not to put anybody down. It's literally to help anybody who needs the help. If I can just help one person with this video, then I'll do my job. I think I'll say that probably every video, man. If I could help one person with one of my videos, I've done my job, because I know how it feels to not know something and to want to have the answers, and you might not have the money to buy somebody's course, and so then you go to YouTube and boom, here it is for free. So with that being said, real quick, I'm gonna go the opposite way. If we were to sell, what it would look like for traders to be trapped. So we have a lower high, lower low, lower high. Here's your lower low. So the same thing when we're buying, when we're on an uptrend where traders get trapped in, is they may think that structure is being flipped, and it could very well continue. So in this case, price comes here, here's your lower high, and then price makes your lower low, but then price buys here a little bit above your lower high. However, price hasn't beaten your lower high and made the real flip. So, from there, somebody might be like, okay, well, I'll see that high here, and they'll take out their fibs. They'll try to fib this, they'll wait for their pullback here. They'll, get in for a buy, and they'll think that, their trade is about to hit. I'm just trying to. I just want to make I took the wrong box. So basically, they'll put their risk to reward tools here, and and they'll want to take these buys here. I'm not gonna do that because I have the magnet on, and yeah, I'm not trying to do that. So they'll take their buys here, and price will go in the opposite direction in which they thought, and so that's where they get faked out, and price starts to continue down. Whereas again, structure is not flipped unless the highs are broken. So unless you see a move here, boom, above these lows, above this last area of resistance, now turn support. Now we're testing these last levels that have been broken. Now we've made our higher high, higher low. Now we can use our fibs. In my case, in my experience, now we can use our fibs, guys. Once this high has been broken, once this area has been broken, boom, now we can use our fibs, and now we can start to look for buys. Take our fib, go here, wait for it to pull back, and then we can start to maybe make some headway. Boom, hit TP just like that. So I just want you guys to be aware of the spots and the areas that you can get trapped and where price can consolidate and look like it's flipping structure. However, structure will not be flipped if we're in a downtrend, unless that last high is broken. Not the last low, you guys. If we're selling and flip and you need structure to flip, the highs must be broken. If we are buying and you want price to flip, and you're looking for price to go in, and flip in the opposite direction, if we're buying, you need for those lows to be broken as well to flip to when you start to go and sell. Something that I do want you guys to practice on, and I'll have to touch on this in another video, is the patterns along with market structure as well. So if you look real close, and I won't go and get on a whole rant about this, however, this area here, this is an inverse head and shoulders. Boom, shoulder, head, shoulder, let it rip. You can take your buys here, you can take your buys here. You could or you can wait for the impulse, wait for the pullback, get your confirmation, and take your buys here. So I just want you guys to see that, a little extra gem at the end of the video about this, inverse head and shoulders, and it could damn well be the same thing when we're buying. And it starts to look like a regular head and shoulders. Here's your shoulder, here's your head, here's your other shoulder, boom, let it rip to the bottom. And that's it, guys. I said in the beginning I didn't want to make this video too long-winded. I gotta go take my dog outside. Hopefully you learned something in this video today. I'll say over and over and over again, if I helped anybody, if I could just help just one person today, I've done my job. And so that's market structure, you guys. Make sure you guys are taking notes. Hopefully I explained it. I think I explained it to the best of my abilities. If you guys have any questions, make sure you ask them to me you can ask them to me on here, comment them down below, or you can hit me up on my Instagram at staffworld. I don't really get on Twitter too much. However, you can hit me up on there as well, at jstaff504. And that's it, you guys. Please make sure you like the video. It's going to help our algorithm. Also hit the subscribe button and the post notifications as well for more content. Hopefully I'll be able to vlog some of these trips that I'll be able to go on. At the same time, I'll be trading in the morning, so then you guys can kind of see like the whole lifestyle thing, like a little lifestyle vlog maybe. However, with that being said, for the time being, make sure you guys go over this video, rewatch it, pause it. Let me know if I'm unclear about anything that I said in today's video. And, we can talk about it, we can chat about it, whatever, in the DMs, and just, I can clear up whatever that I said, and, let you know what I really meant and what I mean, and you can ask me anything. So with that being said, appreciate you guys for watching. Thanks for taking the time out of your day to learn some market structure, and hope you guys have a blessed one. Good day, and I'll see you guys in the next one.